Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 11th of May. Starting off with the FTSE 100, which seems to be rather dead at the moment, but the good news is that we're bouncing off the 50-day line, the blue line there around 77.30, let's call it, and we've got that resistance line there from February to shoot for around 79.20. End of day close above 79.20. We're looking at hopefully up to 83 or 8400 over the course of the summer. But at least we might be able to retest February resistance just through 8,000. On the downside, obviously supports come in just below 7,700, but we have potential of last month's support around 76.40 as the next stage if we break back below the 50-day line. But at the moment, looking okay. The only thing which we're missing or waiting on is the RSI to get back above neutral 50. It's 46 at the moment, or just under 47. So no rush for the bulls at the moment, apparently. Moving on to the DAX, which has been beating the FTSE in terms of bullishness over the recent past. Still hanging above the old February-March resistance, 15,700, but looking for the elusive or unelusive end of day close through 16,000 to give us the top of that September rising trend channel target as high as 16,600 now by the end of this month, but at least by the end of next month. Below 15,700, then there's the chance of having to test the floor of the rising trend channel from the autumn and the 50-day line around 15,500. But looking pretty set fair, especially given the way that the RSI here is in the upper 50s, which is just in the box seat in terms of continuation on the upside or potential continuation. Moving on to the Dow, and I suppose one can already guess that it hasn't broken the one-year resistance line there from back in April last year. That's around the 34,000 level now, looking for that to be broken on an end of day or a weekly close basis. We did have a temporary bull trap there, one-day bull trap through 34,000 at the start of the month, but that's fizzled out. It looks like we've had our third test of the 50-day line, the rising 50-day moving average, 33,100 or so, and sort of makes you think that given that we've had three attempts or three searches for support towards the 50-day line, that's enough, but obviously these things can be rather frustrating in that way. We've got the 50-day line and the 200-day line both rising now. RSI just above the neutral 50 level, so probably looking for another shot at breaking 34,000 there. Worst case scenario at the moment is a test for support at the 200-day line and the floor of that rising trend channel from September around 32,700. On to Bitcoin, where we're waiting for that decisive move through 30,000. Obviously, at the moment, we haven't had that. But here you can see that the market has fallen below its 50-day line. That's the blue line there, around 28,500. And the longer we stay below that, the greater the chance of a test of support from late March, 26,700. And then, worst case at the moment, down to February resistance and former August resistance at 25,000, but hopefully we can avoid that. In terms of a trigger for the upside, it's either an end of day close back above the top of that broken triangle around 28,700, or wait for the RSI to close above neutral 50 versus 41 at the moment. So at the moment, quite a long way away from that momentum trigger. Moving on to the stocks. Starting off with Andrada, which has had nice news with its relationship with Barclays. And here the chart looking quite well, better than it has done for quite a while, apart from the bear trap from below 4 pence, which was there in March. We've now managed to bounce off the 200-day line. And in fact, both the 50 and 200-day lines now rising. So the next time they cross, that should be a golden cross. Run up to the golden cross is normally the strongest part of the cycle, so therefore we're looking for 6.25 pence at that June resistance line, and then 8.5 pence as soon as the end of next month. And that upside likely while we remain above at least the 50-day moving average level at 4.6 pence. On to Block Energy, a company I interviewed quite a few times in the past. Here we've also got a bounce off the moving average area, in this case the 50-day line, which is rising around 1.2 pence. Above that we're looking for 2.1 pence at the top of the broadening triangle there from back in November. RSI's pushed through the neutral 50 level as well to stand at 57 so we're feeling rather more comfortable. In fact, that is a bullish divergence line in the RSI window. So we have those lower lows for March, April, and RSI was higher. There's also, you can also see there was a bear trap gap reversal, unfilled gap to the upside off the low, and we have maintained that. So looking strong there. Moving along to Ben's Creek, where we hope that all its recent issues are finally out the way in the rear view mirror. We gapped off the low there, filled the gap, but then rose. Now we've had 2 days above the 50-day line, and we've broken that falling wedge from November. Above the 50-day line at 18, we're looking at the top of that falling trend channel from the autumn, as high as 26 pence as soon as the end of next month. So it really could be the big turnaround there for Ben's Creek. On to Capital Metals, which has rebounded quite sharply, sort of a bear trap island reversal. Support coming in above the 200-day line on the third day in a row now, so above 4.1 pence, looking for 6 pence as soon as the end of this month. So quite a nice turnaround there, quite a sharp turnaround there with that island reversal and the higher low for April and May. On to a stock where maybe one or two people had their fingers burnt, and here we've got a situation where had a nice hammer candle there for DeepVerge. Bullish divergence going into May, so the lower lows for the share price below 0.5 but higher RSI trace, so that gives us the confidence that above neckline resistance, which I suppose you can have as low as 0.63, above that we're going to test the floor of the gap there at 0.82 and then maybe manage to crawl back halfway or so into that big gap down that we've had. Best case scenario is up to 1.33 by the end of next month, but maybe that's being a little bit optimistic. The most likely situation in these scenario in these situations is that you just break above the floor of the gap, maybe by a little bit, so 0.9, and then you come back down again. But at least we've got a base there, and above 0.62, which is the initial May resistance, looking for a push higher on DeepVerge. Lots of speculation still on Fox Marble, where people were doing their Foxonomics, I think, over the recent past in terms of where the share price could be. On the technical front, I was quite clear in trying to say that, saying, in fact, that 1.4 pence old resistance on the way down should be support. Next level 1.8 pence, and if we get through 1.8, then it would be up to potentially as high as 4.5 pence. Which is a resistance line projection from the spring of 2020. But the key here, holding at the 1.4 level, which was actually the low on the nose today. So let's see if the shares can maintain that support. Wouldn't be surprised if there was a slight nudge below that, because it just that's what the markets tend to do. But 1.4 basically looks like the support there. So if you're a fan of the shares, that should be your base for the situation. On to Ilika, and here you can see that we've had the shares crawling up this rising trend channel in place since October last year. A bear trap rebound from below the 50-day line around 45 pence, and above that we're looking for the top of that rising trend channel as high as 85 pence over the next 2 to 3 months. Some work to do there, i.e. breaking above the 200-day line and breaking above the old April resistance, but that is the hopeful destination for the shares while we're above the mid-40s. On to a stock which haven't covered for a bit, and I feel I sort of should have covered a bit more, but Lexington, a new leg to the upside since the beginning of last month. The old target around 8 pence at the top of the rising trend channel from August last year, but if we get through 8 pence, which it looks as though we will by the end of this month, we've got a new target there, an April 2021 resistance line projection as high as 10 pence by the end of June. We've got the 50 and 200-day lines both rising sharply, and the ideal thing here is obviously that we remain above that old peak from November around 6 3/4 pence, above 6 3/4, looking for up to 10 pence on Lexington. Next stock up is the return of the MAC, Marechale Capital. Here you can see that we've had a nice bounce off the 50-day moving average. Third time lucky in terms of getting through that. Neckline resistance around 1.35 pence. Above that, looking for 2.4 at the top of that broadening triangle from April last year, and a nice bullish divergence line as well that you can draw in the RSI window. So some lower lows there, but in fact that nice bear trap there in April, but the RSI rising. So ideally we stay above 1.35, head to 2.4 by the end of next month. On to Restaurant Group, where saw somebody on Twitter mention this a few minutes ago. Just wanted to look at the chart here just to reiterate the situation. Had a gap down for the shares in March, gap higher, so it's like an island reversal. While we're above the old March peak at 46 pence, let's call it, looking for the shares to hit the top of that rising trend channel from August up to 60 pence, perhaps as soon as the end of next month or even sooner. But the unfilled gap to the upside, very strong, a very strong signal on a charting basis, and the longer we remain above that gap up day at 47 pence, the better this chart looks. Just a couple of stocks to go now. First one is Thor Energy, and here it looks like but the shares are trying to break back above that broken resistance line. We broke it once, and second time lucky, hopefully. Looking for the shares to get back to the 0.4 area at least, which is the 200-day moving average level, which has been resistance over the last year and more for the stock. So above 0.25, looking for 0.4 on Thor Energy. Finishing off with a stock which seems to be still under the radar despite strong fundamentals, Thor Exploration. Got that rising trend channel from the beginning of last year, top of the channel now heading towards 22.5, 23 pence, and hopefully we'll see that by the end of next month or even sooner, given the way that the 50 and 200-day lines are both rising, and we've had a double bounce for the RSI at neutral 50. That's it for me today. More updates tomorrow.